Good afternoon. This is Tom Alexander. It is Sunday, May 9th. It is about 5:30 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekend update, stock market update for the coming week. And we traded at new all-time highs at the NDX and SPX. As I have been suggesting, I'm not alone in that we soon would. Now, what is setting up now is a situation that is, for once, it's almost binary. We're going to have to see an acceleration from here in the other indices, or I think we're at a short-term top. So let's take a look at the charts and I'll show you what I'm talking about. Okay, here are the primary U.S. indices, the SPX, the Dow, the New York Composite, the NDX, the RUT, and this is the S&P equal weighted index. But the stark thing, takeaway from viewing the indices right now, is that the SPX and the NDX are so far divergent against the other indices, all of them. Pick one. And, I realize, I understand all the reasons why, but that in the long run, that doesn't matter. This is not a healthy market. This is not, this particular structural anomaly is not going to continue. It will be resolved one of two ways. We're going to begin to see an acceleration in the other indices, and maybe even further strength in the SPX and the NDX, but maybe not to the degree that we've seen it. Or we're really close to putting in some sort of short-term top in the NDX and the SPX, and they will trade deeper into the ramp ranges that we've seen over the past, since the end of May, but then going back even further, the end of April. Which one is it going to be? Nobody knows. Anybody that tells you that, whether they're a technical trader or a macro trader, it's just they're being paid to tell you something, but there's no way you can know. There's a lot of economic stuff next week. We have the Fed meeting on Wednesday. All of these things can be catalysts to some sort of move that resolves the current set of divergences. Let me show you quickly another view. Now, I've been talking about breadth in the 10-day moving average of advancing issues, which is this red line you see here. And it reached a level a week or so ago from where you typically get strong rallies. Now, not always, and there is another level below here that's even more highly correlated with lows, and we did not get there. But this is not, and I put this in the written report, which you can pick up, by the way, if you go to the website, alexandertrading.com, click on weekend reports. The reports are free. You can see the archives of reports there. Also, while I'm on housekeeping, if you find value in this, please like it and subscribe. Okay. So anyway, so the 10-day moving average advancing issues, it reached this level, is curled up, but this picture, a bullish picture from this, isn't congruent with everything else that I'm saying. Now, again, if we all of a sudden have more wonderful news, at least it's perceived that way by the market, and we ramp higher, then this will have an expansion by the other indices, and you'll see an expansion in breadth. So, I'm just pointing this out because I have been discussing it for the past 2 or 3 weeks as being potentially bullish, and that's increasingly at odds with the divergences that we see among the indices. So that's not going to continue. And then I will leave you with one other view. This is if I can find it here. Here we go. This is the profile view. Now, each letter is one day's trade. Each profile unit is a month. And the takeaway from the current profile view is that we're going to get range expansion outside of the June range. Maybe up, maybe down, maybe up and down, but we're going to get range expansion. So I hope you have a good week. I hope you found this helpful. I'll be speaking with you again soon.